Welcome back to FIMMAC 2021, the next normal. But before we talk about the next normal, our first session will be talking about the new normal. Everything is rather normal these days. In this panel, we'll be trying to unearth the conversation of what were the challenges that the industries faced, but more importantly, what were the lessons that were involved, and how do we move forward from this? So here to unpack this, I have a rather illustrious panel joining me. Tomo-san or Satoru Yamadera, the advisor at the Economic Research and Regional Cooperation Development at the Asian Development Bank, as well as Dato Teng, the MD or Managing Director at Affin Hwang Asset Management. Tomo-san, maybe we can start with some opening remarks by you.
Okay, thank you, Ibrahim. Thank you very much for giving me this opportunity to speak on this not easy question, what would happen under the new normal. I'm Satoru Yamadera. Actually, my focus at the ADB, I'm supporting the ASEAN plus 3 capital market developments, financial market developments. So today's sort of a discussion, I'd like to focus on something clear what has changed and something which is not or will not change. So, so 2 points, maybe we can expand the discussion. So the next slide, please. Next slide, please. Yes. So I'm not the fortune teller, or I don't have a crystal ball to tell the future. But I think we can look at the things, what happened during the pandemic, and we may be able to predict the future during what has happened in this pandemic. And the notable phenomena is actually sort of a so-called digitalization or online environment. And this chart is from ITU, International Telecom Union, and this is a kind of data usage. What is striking is actually the big shift of the data usage in Asia. Of course, other regions also see the increase, but comparing to the other region, it is quite notable. The Asian Pacific, and I would say this is Asia, we see a huge jump in the data usage. And we also need to be sort of noted or mindful. We never go back in the previous level. So which means, this jump and shift will continue. And this means that everybody's daily life will be more online, and we will use the further usage. And this is, I think, a quite important fact, what happened during the COVID. And from ADB's point of view, of course, we will support the recovery. But we are not claiming going back to the previous normal, no. We always mention we need to build back better. So whatever the things that we're going to be normal is going to be better than the previous. In what sense? In terms of use of technology, hopefully that would affect the people's living life and quality, and also in terms of sustainability of economic activities, we hope to be able to improve the situation. That means what we mean by build back better. And we understand that actually the COVID-19, the positive side of COVID is the acceleration of the technology and digital transformation. People now get used to the use of e-payments. Previously, in Asia, in many countries, we see the use of cash. But I think because of the sort of food delivery or transportation. Now we see further use of digital payments everywhere, not only in Malaysia, but also Indonesia, Philippines, and other. So this is quite important fact that we need to understand. And new normal very much depends on the technology and IT infrastructure. Actually, during the COVID, the country which spent high investment on IT and higher IT infrastructure suffered less comparing to the average. And that is quite understandable because every people's life moved to online. So the countries which have good IT infrastructure could survive, or at least ease the pain of lockdown and also other negative side of COVID. And this situation will continue. So this is kind of a new phenomena we noticed during the COVID. Next slide, please. So as I said, the technology use of digital is the big change. But also, there is a thing that we don't see any change, or we won't be able to see the change. And so that is the aging. Asian countries, I mean, this COVID, we see so many fatalities, but in total, we also see less death from other causes. So overall picture of demography hasn't changed much. So it is important to understand. The population is one of, or demography is one of statistics which we can predict easily, and we need to understand this. The trend of aging will continue, and that really put the pressure on Asian economies for next 20, 30, 50 years. And the right-hand side shows how technology can enhance the economic activities even under the aged society. It is important to understand that aging is not a bad thing. We may be able to mature our knowledge. Of course, physically, we may not be able to work like young generation, but technology may be able to substitute those labors. Also, we may be able to translate those knowledge and technologies into software, and that may increase the labor productivity. Of course, technology can help education, not the younger generation, but also the older generations. And the technology can improve the matching the workers. Of course, there is always some demand for old people. So old people may need to continue to work, and retirement age may be extended. And those matching will be supported by the technology. And of course, the technology will help extend the life expectancy. And because of this COVID, I think online diagnostics and also you don't need to go to hospital or even remote area. They may be able to receive some high medical treatment through online technology. So these are the things. So the COVID really accelerated the transformation. And the big challenge for us is how this technological shift can help mitigate the impact of aging. I mean, this theme is, we've been discussing this aging issue for 10 years. And, but it's not easy to change things. But thanks to technology, maybe we can accelerate to meet the challenge. So these may be also quite important point that the asset management industry need to consider. So these are the points to consider what would happen in the new normal. So I hope we can have a good discussion. So let me end my short presentation at this point. Thank you.
Thank you, Tomo-san. Before we jump into Dato' Teng's presentation, there are some conversations that needs to be had. I had a very interesting article that I read very recently that talks about the aging economy or the silver economy on the sunrise. And in it, it argues that digital adoption amongst silver economy players, I'm trying to use polite words here, I'm not trying to say, you know, senior citizens, let's just call it silver economy participants. The adoption is on the rise across Asia. Big e-commerce companies like JD.com, like Shopee, like Lazada see an increase in adoption of e-commerce. Folks are staying at work a little bit longer, even if it is a change of their designation, a change of their role. We're looking at the senior citizens looking for longer term investment products. It's no longer a 60-year-old kind of cash out. It's more like 70 years old, or you know, even longer than that, even 80 years old. Do you feel that the new normal or the next normal is going to be more solutions going to be provided for senior citizens across Asia?
Yeah, I very much agree. And actually, I'm currently evacuating in Japan from Manila, but I'm working from Japan right now. Well, you know, as you know, Japan is very much aged society. And I mean, if you walk in the street, you see more old people than the young children. So it's not the future. Age in Japan, it's a kind of ongoing facts. Well, to me, technology is really changing the behavior of elder people in Japan. Well, people sometimes say that the elder people may not be able to adapt to those technologies, but yes and no. And I would say that the technology can accommodate. Well, my father cannot do the typing, but he can use the kind of a voice recognition. And so he sent me the email via voice message, and also, you know, translate into the word. So the technology is also significantly, rapidly catching up, and that would help a lot. But also, I would like to emphasize that the technology cannot overtake the human being. Well, some factories in Japan, well, sometimes the very tiny piece of parts needs to be crafted by the very well experienced craftsman. Because he can sense the micro nanometers. But actually, unfortunately, at this point, the machine cannot do so. And like the parts for rockets or something very special needs to be still handcrafted, handmade. And experience is extremely important. So again, no need to fear. Of course, there are some change of the job and transformation, but there is always some demand for the human being, and I hope that the Japan can show some leading example in that area. And so people in Asia can feel more safer to transform to the new sort of aged generation. But the one big concern is Japan is lucky in the sense that the wealth of accumulation is far much higher than the rest of Asia. The China now is the biggest in Asia, but per capita wealth accumulation is far much less. And the big question is how that would impact social security funds, pensions, public pensions. Unfortunately, those are not enough. This is really, I would say, the concern that Asian sort of well-experienced generation can live longer with without any concern. You know, that will be, I think, a challenge.
We'll put a pin on the silver economy for the time being and move to a certified millennial right now, Dato' Teng Chee. Dato' Teng, please proceed with your presentation.
Good morning, Sani. Good morning, Tomo-san, and good morning to all who are listening in. Let me move straight to my next slide, slide number 1, to give you some thoughts that I have on this particular topic about living in the new normal. But I'm going to speak from a local perspective. I think Tomo-san has given us a very good overview on the perspective of Asia and global in how the world would shape as we go forward from here. But let me just take you back one step. During the pandemic that we had in 2021, I think one of the industry that has shown a very resilient environment is really the business that we are in, the asset management business. It has grown rapidly over this period of time. We have seen a big increase in the number of accounts for investors who are below 35, partly because of the development of the private retirement scheme in Malaysia. And overall, if you have been a consultant to the business, you have also experienced a heightened increase in business over that period of time, and there was a spill over into the early part of this year. And if you ask me why, I've been asked constantly by people, why is this phenomenon in the asset management industry, where it has actually took a big leap forward during the pandemic? And I guess the answer, there are various answers to it. There's no one single answer. I guess the key answer is really Malaysia experienced a phenomenally low interest rates into this pandemic. We never had interest rate at this level of 1.75%. The last, even during the crisis of 1998, if I'm not mistaken, interest rates barely stayed below 4%, too far from 4% level. So this phenomenon has actually driven a lot of savings into the mutual fund industries, and a lot of you have benefited in the process of being able to give advice to your clients of how to redeploy their savings. I think the other point I like to make from this slide is really into the new normal. Interest rates will continue to stay low over the next 2 years, 1 or 2 years or so, and there will continue to be a hunger and thirst for alternative. And I think that's probably where the opportunities lies for the industry. The other point I'd like to make is really on aging. Malaysia, like other countries, are also aging over time. Over the next 20, 30 years, you will see that phenomenon taking place. And there's a lot of savings in Malaysia. And a lot of them means that there are opportunities for the industry to continue to grow if you can provide suitable solutions to the aging population. The next slide, please. The other point I'd like to make is about the digital push by the industry. I think one of the good things, or one of the positive effects from the pandemic has been a push by the industry players to go digital. It accelerated the process, right? I've been in this business for over 20 years, and I have not seen how fast adoption of technology has taken place in the industry. I think in the last year or so, either as a company we push digital forward and get a greater adoption firm-wide. Otherwise, you can't do business at all because everyone is locked down at home. But that's only the front end, right? We're seeing a great push at the front end by the industry players to adopt technology, and I think the industry has come through very strongly. That despite most of us were only having 20-30% staff in office during the height of the pandemic, business have not been affected in the way that people can still transact mutual funds online. I think that's something that the industry has moved forward very well. But when you talk about digitalization, there are various aspects of digitalization, right? There is the front end itself and there's the back end itself. I think at the front end, I think there's still a lot to be done, especially in the area of AMLA, KYC, for the industry to move forward to have a lot more automation in that particular area. In the back end, straight-through processing has continued to take place. However, in the area of investments, I do see a shift eventually. I mean, the constant question that we keep asking is that can robots replace fund managers in this industry? Okay? And I think that's something for the industry to think through, and how we can use machines to supplement what we can offer to the local industry. The last slide I like to talk about into the new normal, into what I observe going forward. The last slide, please, is this. I think I've seen one of the great adoption of digital assets by young people in the last 18 months or so. I was told Luno platform, the one that people trade bitcoins and whatnot through it, has actually garnered about R1 billion of assets within the last 12 months in operating in Malaysia. That shows you how fast adoption is like. Of course, it makes it easier when prices of bitcoins are rising. But the fact is that the young people of today are willing to try new stuff, new assets, things that the older ones will not be able, probably will not even try to figure out how to get it done. My point to you is this. As a consultant to the industry, I've been asked, will the industry change into the new normal? I guess in the short term, no, because I think our investors base still prefer a fair bit of advice, a fair bit of face-to-face meeting and direct interaction. However, I'm here to say in 20 years from now, I think we're going to see a shift in behavior. But the young people who are transacting into the digital age and digital assets, these are all in their 20s and 30s. Give it 20 years from now, they will be in their 50s, and they are used to transact on digital platforms. They may not enjoy, they may not request or ask for face-to-face servicing. Number two, a fair bit of these investors will then are used to volatility, and they may have very short-term horizon in their perspective on investments. And that's probably for the industry to think about. How do you address this segment of the marketplace as the market will change in the next 20 years? Those are my comments really. And I'll pass you back to Ibrahim, and I'm happy to have a greater discussion on some of these thoughts I have into the new normal. Thank you very much.
Thank you, Dato Teng. You know, it seems like the silver economy theme has been re-emerging for quite a bit. But with the expectation that low interest rate is going to last for quite a bit, and we know that right now fund managers or investment managers are having a lot of products, sometimes too many products in the market right now. Do you think that the opportunity, and this question is for Dato Teng, do you feel that this is an opportunity for service providers such as yourself and your competitors to streamline the products, to make it simpler, to make it longer in terms of tenure for those that want to seek, you know, retirement later on in their careers, maybe 70 years old or even 80? Is that an opportunity for us to rethink on how we deliver products to the silver economy?
It's an interesting question, Ibrahim. I mean, there are people who say that we have not enough choices in Malaysia. There are those who say that we have just too many products in Malaysia. I guess there's no straight answer to that, because to each is their own. My view is that we continue to try to educate the market that the way to invest is really not to invest just by one fund. Chase the latest and hottest market like China 2 years ago. Today, may want to chase the internet stocks, the technology stocks, or chase US market because it's doing so well relative to the Asian markets or emerging markets. I think the way to invest, in my view, really for the industry to move forward, that's my perspective. Right? I mean, my colleagues in the industry may not fully agree, but that's my perspective. Is really the way to invest is really to look from individual asset allocation perspective. And the way to invest is really have a diversification of your investments across different asset classes, across different jurisdictions. That's the way to invest. And I think that you cannot run away from the fact that the markets will be volatile, the environments will continue to be challenging. But in order to overcome that, it's not to really chase the markets. It's really about allocating well so that you can sleep well over time. However, as I said to you, the young generation of today We invest in Bitcoin when they sleep, and the next morning when they wake up, Bitcoin is up 10% from 60,000 to 66,000. And when you tell them invest over 3 years, they say that's too long a time horizon. I think that's probably the challenge of the industry over the next 10, 15 years, how to convince a new breed of investors who are so used to being short-term to think beyond 2 months or 3 months. I think that's the challenge of the industry.
There's an article that I read last night, which is talking about Wall Street putting together an ETF with coins, Bitcoin, Ethereum, you name it, and then marketing it as a safe product because it's a diversified product. The first thing that came to my mind is, I mean, they got the diversification there, but I don't know whether the volatility is being addressed. But it seems like the demand by the market, at least in the US, is there. So, you know, if the consumers want it, I mean, you know, what happened to the customers always right? I myself would not, and I'm a young guy, right? I mean, I assume I am young compared to other people here. But it's like, even I am very nervous about that whole situation, right? And you can mask it with ETF and all that, but the underlying asset is still price volatility. So, you know, it's not about the biological age, it's the psychological age as well. So I'm okay with unit trust growing at very low interest rates as long as it's safe. Yeah, so how do we match these two wants, right? The psychological age, the market age, the biological age with the products that is being offered in the market? Maybe Tomo-san or Dato Teng, either one?
Well, you are asking me a very difficult question because I've been in the public sector for years. Yeah, before joining ADB, I was at the BOJ. So from regulators' perspective, so in a sense that my view may be conservative. Well, I guess also another point I would like to highlight, and particularly I noticed, and in a sense, as I mentioned, I came back to Japan due to COVID, and I'm working from Japan. And but taking this opportunity, I'm also trying to expand my network, and I've been meeting with a lot of so-called millionaires generation which succeeded in investments. And what I've noticed is they are quite independent. They analyze company like analysts. They are really the fund managers. Or sometimes when I discuss with them, I feel that they are more well experienced than the ordinary fund managers. And those sort of the people are growing. And also they are sharing their knowledge through YouTube or Instagram or whatever. So that I feel that the ordinary so-called wealth advisors role, whether they continue to exist in the new technology, that is a kind of the question. Also the financial products that you mentioned, also Japan. Actually in Japan, there are more funds than the listed equities in Japan, thousands of the funds. And often the case that they don't last long. So some themes comes up, so easy to sell to the consumer. So the brokers go to the retail investors. Now, you know, technology is really the season, so that why don't you buy these stocks, and why don't you make a portfolio, you know, through these funds? But I feel that this sales pitch was quite appealing to the old generation, but a younger generation, at least to me, they try to think by themselves. And of course, some are quite short-termism, but I don't know whether I can call it the majority. My sense is maybe 1/3 maybe short-term, but the rest could be long-term, or maybe 1/3 is, in a way, they try to follow like a fund manager's approach. 1/3 they don't know, but they are quite interested in. So like a 1/3, 1/3, 1/3. And how to allocate, I mean, from industry's perspective and from regulators' perspective, we shouldn't generalize the retail investors. At least we need to make sure that the investors understand the risk that they're taking. And if the investor wants to take more risk, or they try to understand, they need to be able to access the information. So the transparency and is quite important. And also I feel more and more investors are emphasizing the sustainability of the corporate activities, which does not mean only the monetary return. So from corporate side, they need to look into whom they are engaging. So they need to engage various stakeholders. Stakeholders in this context is not just equities holder, could be also employees, but also large kind of share of the customers. And I think the risk in terms of the corporate risk, the risk which I mean, sometimes they don't know the supply chain or whatever happens, what sort of product they are buying, but this may create the big impact on the business. So the stakeholders communication is going to be more important for companies, but that also gives the opportunity for retail investor to understand the corporate activities. And not all, but maybe hopefully 1/3 of investors try to investigate and try to analyze the companies. But to me, I feel that those are the winners who can so-called fire. So the financially independent and seeking for early retirement, those are kind of generations. And that is also what I feel this pandemic. This is just my personal observation, and I don't know to what extent that would apply to Malaysia. But in United States, also the so-called Robin Hooders, they tweet or chat each other and share the information. So it's each one is quite small investors, but as a collective action, they may be able to move the market, which hadn't happened before. So I think we need to be mindful. Who are the customers? In Japan, I think the biggest or the most rapidly growing asset management is micro asset management. Only 1 yen or even a point can be changed to the funds, and the fee is extremely low, because if you take 10% out of $1, that's too much. So those micro investment is actually something happening, and that is going to be, I think, a new trend. And how to educate them? Well, I don't know. Sometimes I feel that this wording, I mean, as a regulator, financial education literacy is important, but that gives the sense that we are looking down those people. But I mean, as I said, the retail consumers, I mean, they may have a far much superior knowledge. They make kind of the research on a day-to-day basis, and they go to the supermarket, they see the products, and that is actually the new emergence of the new type of the investors, what I feel, and those are becoming millionaires. That's my comment. Thanks.
Thank you. Dato Teng, do you agree with this?
I think Tomo-san has some great points on how do we look at retail investors, even among the ones who are younger ones that we engage. Clearly, ESG is something that comes through. Again, it's not easy to generalize them, because there are different pots of retail investors, young retail investors, depending on their exposure and where they have been and stuff like that. But generally, there has been a lot more question raised regarding issues like ESG. And as I said earlier, digital assets is something that they're very interested in. And again, the observation is really about the moment there are conversations about digital assets. Those conversations then will always go back to about how how fast the return can come through. And again, when you compare it to the mutual fund industry, it's a very different risk-return profile altogether. Right? The mutual fund industry operates very differently on the diversified portfolio approach. So I think it's really for the industry to explain, to educate, and I think in Malaysia, the other thing I do notice, again, it's not easy to make a general statement. The level of investment or knowledge among our investors have increased the last 20 years. However, in the rural industry, in the rural sector, it's still far from where they should be. Right? It's always in the urban area that we've seen a lot of exposure and learning and growth in terms of knowledge. But in the rural sector, they seems to be lagging there. So I guess for the industry is really when we look at the entire landscape, we just need to be mindful that the rural sectors is still lagging behind in knowledge, and we have to be mindful how we market and distribute our products to that particular segment.
We're going to start opening the questions to the floor. I see some questions coming in. But before we jump into that, see, the theme is on retail investors. Some of them may be smart, but localized, geo-localized to maybe urban, and never underestimate the retail investors. Institutional investors, I think we can kind of continuously see the progression of how they think about investments and trying to enlarge their own portfolios. But something that is interesting is a conversation that I had with a managing partner of a management consulting firm here in KL. He was talking about the drivers for technology adoption. It's not revolutionary or visionary CEO. It's not good infrastructure like 5G or all the other stuff involved. It's actually the pandemic. The pandemic pushes people, pushes companies, and pushes fund managers to adopt technology like anything before that, right? So harkening back to what Dato Teng's presentation early on was talking about, robo-advisory could be something of a serious notion moving forward. And then maybe Tomo-san was talking about micro asset management, where as little as 1 yen, and no human being can manage that, right? You multiply that with millions of investments across the portfolio. So this is the backdrop of this one question that is coming in from the floor. The question is, do you foresee any threat to robo-advisory versus the traditional managed funds in Malaysia? Okay, do you foresee any threat to robo-advisory versus traditional funds managed in Malaysia? Any plans for fund houses to explore robo-advisory? Dato Teng, I think this question is for you.
Okay, thank you for the question. I would not say that it is like you put them in two silos, right? Robo-advisory, one silo, traditional asset managers, one silo. I would say that the best formula, as I said in other forums, is about using robo-advisory as an enabler tool, as a tool to serve your clients better, right? If those are made available to you as a consultant, to be able to then sieve out a solution for your clients. That to me is where I see the industry going the next 5 years or so. Robo-advisory standalone itself, you'll find the challenge is how do you reach out to the market? It's a very expensive cost to do client acquisition digitally. It is very expensive. However, if the local industry players who have their existing client base adopt the robo-advisory as part of their sales process, I think that's more efficient and a lot of value to be created from that process. From my perspective in Affin Asset Management, that's probably what we want to provide, what we want to develop and partner with to bring out to the local marketplace. And I do see beyond that, as we move over the next 15, 20 years, the challenge is that really as the younger ones are used to transact using platforms, and increasingly more will get into the bandwagon, I do expect the industry players to have to think about how do you reach out to your clients and the role that consultants will play in the next 15 to 20 years. That's probably something that the industry would have to think about seriously.
Tomo-san, a question for you maybe. Alan Tan is asking, it seems that volatility is the future because the information flow is very quick now. How could the regulators tell investors that volatility, is not good for you? Maybe it is good. I don't know. Tomo-san?
Well, thank you. Thank you for the question. Well, I don't know the volatility. Probably, I don't know the volatility has increased, and also I don't think volatility is bad thing. Always bad thing. I think this depends on the on sort of investment horizon, and I think retail investor again. Generalization of retail investors, I think it's going to be more and more difficult. And probably that's exactly the area that the robotic advisors may be able to play. I mean, at least some sort of screening, and the Dato mentioning, that can be used as a kind of sales sort of technology, just to classify or sort of categorize the retail investors. So again, this very much depends on the investors' investment horizon. I think the younger generation start feeling kind of a concern or fear in a retirement in the future. So their time horizon may be 20 years, 30 years. So this volatility, maybe the huge drop in the index, may be a good bargain for them. And this very much depends on the time horizon. Of course, some may lose because of the FX volatility, but they are aiming for the volatility. They are seeking for the volatility. So volatility itself is not a bad thing. But as a regulator, we need to make sure that those volatility will not create the threat to the financial stability. That is the regulator's concern. And also volatility, I mean, the elimination volatility is impossible. But how to manage those volatility? So when something happens to the market, we try to provide ample liquidity. And that's exactly what central banks are doing right now, because COVID is something unexpected, and that is quite negative to the economic activities. So that's what the policymakers are doing. So I think the policymakers will focus more on the not elimination, but to sort of mitigate the negative side of volatility to the extent possible. That's I think, regulator's perspective.
The chairman of SC's speech this morning before this panel started was talking about CMP3, or the Capital Markets Master Plan 3. This is the third reincarnation of long-term capital markets conversation. One of them is, of course, trying to regulate digital asset exchanges and cryptocurrency, which brings it to the question of volatility, the one that we spoke about. But this question from the floor maybe is for the both of you, Dato Teng as well as Tomo-san. People are picking up investments in cryptocurrency, which is an unregulated asset. The crypto is unregulated, but I think in Malaysia we have up to 4 DEX, or digital asset exchange, that is regulated. Anyway, the question is, wouldn't this present multiple risks to investors? Do you think that this is a smart idea for investors to go into this space? I think we've touched on this a little bit before, but yeah, specifically cryptocurrency, because it gets keeping a lot of thumbs up. So I think I have to ask this, or else I'm going to get attacked on Twitter or something.
Okay, shall I go first?
Go ahead. It's a tough question. Go ahead.
Yeah. Well, first of all, from regulators, we need to think what is the value behind this asset, and this sort of a crypto asset is based on the sort of trust, or in a sense, at least in terms of the process of validation. At least the crypto asset, which is based on the proof of work concept, requires the so-called mining, and so the power of electricity is the underlying value to create those assets, and also people's belief is translated into the value. But actually, if you start thinking why you believe in the currency issued by the central bank and the government, actually, when I talk about the function of central bank, I always raise the question, okay, this is the 10,000 yen. This is just the paper. And do you know how much cost to produce this just a sheet of paper? This is just a kind of 20 yen. But people believe this sheet of paper has the 10,000 yen value, you know, like 100 US. So the cost is like 20 cents. So also the so-called the fiat currency or whatever, you know, issued by the central bank also depends on the credibility. And the things, well, the central bank was really upset mostly. Now it appears to us that it's going to be kind of the competition of the trust, which the government or central banks didn't have to worry about. But this is also the time. So at this point, I don't think crypto asset, the trust, can surpass the trust of the government. Still, people believe in the government. If something happens, people go to the regulator, ask for help. So current existing social framework depends on the framework of the government. So inevitably, and people trust in the government. But you never know what will happen in the future. Or also, this emergence of crypto asset may put the discipline on the government and central banks how to behave. So I think first we need to understand, you know, why people trade. And then, of course, there is a kind of, you know, like people passing the hot potato. As long as you can find a person who gets it, you know, you may be able to get, you know, raise money. Well, unlike equities already has a kind of established theory, and we sort of anticipate or make a focus on the future value of the corporate. But unfortunately, the crypto asset, there is no fundamental theory which backs up the value, only the trust. And, you know, people just, you know, making a poll, you know, kind of a beauty poll, like Keynes, you know, you don't choose who you like, but you need to choose whom others think like, others think good, or, you know, people who like, and then you choose. So the this is kind of element of a beauty contest, and I would say whether that really creates the economic wealth or value added, that may be a big question. But again, the original point that if the crypto asset put the pressure on the government and the central banks, maybe that's the economic value. But as long as those assets are traded just for the expectation, unfortunately, that will not replace the legal tender. That's what I think, and that's also the limitation. And to that extent, I always feel that the retail investors are smart. They know the limitation. So I don't know to what extent regulators should worry on those. In terms of investor protection, we need to provide tell the risk. But as long as far as the risk to the economic activities or economic management, at least at this point, the risk would be limited.
Dato Teng, do you want to add?
I guess from a risk perspective, or is really, I think from a regulator standpoint, they provide the platforms for investors to be able to assess those assets. However, the investors have to assess of themselves whether they want to invest in crypto assets. What I've said earlier, seems like there is $1 billion that has been deployed up to now. I'm not one of them, right? I'm just like Ibrahim. I read too old school for these things. When I look at it and you ask yourselves what is the value of Bitcoin, you can never derive the value because it's as much as I finally find the answer. The answer is really more money chase out of it, the price will go higher. And the more people get greedy, the price will go higher. So that's how it's driven. And I will not be surprised one day. I'm not making a prediction. I'm really surprised that one day Bitcoin will reach 100,000, right? Just because the access gets wider. More and more people deploy money, and the amount that's available is limited. I think out of that 24, 25 million Bitcoins, the actual ones that are traded is probably half of it, right? The rest are all lost in transition. So when you have more money chasing it, obviously there's only eventually leads to higher prices. That's all. But whether it has value to it, I don't know. I can't see any of it. But I've been wrong for the longest time. So I think I'll stay wrong for a while more.
No, but you have been right for a few times as well. And when you're right, you're right. You're really right. So, you know, sometimes we take your chances with the prediction. Yeah, I'm going to call it a prediction anyway. We have to draw this panel to a close. It's been a very enlightening conversation. But maybe I can throw a short closing statement by maybe Dr. Teng, a short closing statement before we end the panel.
I think we've been focusing a lot on cryptocurrencies. I think that's probably an interesting topic that probably dominate a lot of forums that I participated. But I think if I want to talk about the industry going forward on the new normal, I remain extremely optimistic about the growth, because there is still $1 trillion of savings in the system looking to deploy for opportunities. And if the interest rates continue to stay low, a lot of individuals do look out for good investment advice. And I hope that as you continue to upskill your knowledge and to be able to offer solutions to your clients, I believe that there are a lot more potential and opportunity for the industry to grow. The industry has grown double-digit over the many years, and I'm optimistic that the industry will continue to grow at the high single-digit growth rates over the next 5-10 years.
Your closing statement?
Yeah, thank you. As I mentioned, we need to go back to better situation, so build back better. And hopefully the technology can help, and also the probably more customized investment opportunity can be created through the technology. You know, generalization of retail investors may be not good way. So with the technology and the help of technology, hopefully that would address the sort of more investment opportunity for individual, and that would mitigate the pressure of aging. And that's what we would like to see. Thank you.
Thank you very much. That was Tomo-san or Satoru Yamadera of ADB, Asian Development Bank. Earlier on, you just heard from Dato Teng Chee, the Managing Director at Affin Hwang Asset Management. This concludes the first panel, Living in the New Normal for FIMMAC 2021. We're still talking about the next normal, what it means to be working and trying to address the challenges and lessons learned from the pandemic. We'll go for one short screen break. You can use the time to stretch your legs, grab a coffee. Quite literally, I'm going to order some coffee that's going to be delivered to me. That's the new normal. I've never had to order coffee via my phone prior to the pandemic. That's a new thing. Actually, it's not new. It's been doing that for the past 18 months. It's something that, you know, it's a new normal is a new normal. There's no new about it. It's just normal. One short screen break. When we come back, we'll come back at 10:45 a.m. For us to start the second panel. Again, thanks very much, Tomo-san and Dato Teng.
Thank you.
Thank you.